Good evening. We should be live. Hope everyone's doing well. Of course, let me know in the chat if you are alive and well. Hope everyone's had a nice weekend and a very Merry Christmas. No shortage of things to talk about today, as usual, so let's get into it. Let me just open up the chat, make sure I can see your questions and all sorts. Logan, Fantasy Cricket Freak, Flowery, of course, Dixie, hope everyone's doing well. Hope you had a great Christmas, thank you. I hope you had a great Christmas as well. Hi Philip, how's it going? Cool, looks like everything is working. Oliver, hello. Hello, hello. Alright, so first things first, a thank you to the sponsor of the show, Bybit. If you'd like to visit them, you can find their links in the description below. And thank you for their support and for making this possible, of course. Again, more information about the sponsor can be found in the description. Be sure to check them out as a way of supporting the stream. Second of all, like the video if you haven't already. A quick click. I'm sure it'll be worth your time. And, of course, a thank you to the audience for being here on this windy Monday morning, at least here in the UK. I'm somewhat enjoying the tier 4 restrictions because I can go outside. I'm just waiting for the third mutated strain that'll send us into tier 8 so that you can only look out the window or something. I really don't know what's happening at this point. But there we are. There we are. Okay, so some fun stuff to talk about. We'll start with Bitcoin, we'll do ETH BTC, and then we'll look at XRP, and then sort of see where to go from there. So, first things first, I will continue to be somewhat inactive on the Twitter side of things, because work is currently being done on, as you'll recall, this thing. Cryptocurrency margin trading, an accessible guide. You can see some legwork has already been put in. So this is going to be my focus pretty much until it's done. And Twitter is a distraction from that productive endeavor. So definitely worth waiting for. But if you're expecting very up-to-date type of stuff from me, I'll be a bit quieter on that front. So certainly the newsletter and these videos here on Mondays are going to be the place to get my views. So in terms of when that's going to come out, it really depends on how much we add, the proofreading process, and the friends we're going to have take a look to make sure it's reasonably good. I would estimate at the earliest maybe 10 to 14 days, but it really depends. It really depends. So maybe earlier, maybe later, but around 2 weeks is a decent ballpark area for that. I'm sure it'll be worth the wait, so that's that. As for Bitcoin, let's talk about Bitcoin. Number go up, good. So we're coming into the monthly close, and there's really nothing to say. No reference points, no crazy candle developments, sort of a big wicks or below the monthly open, etc. It just looks good, right? Very similar on the weekly time frame, ever since the close above 20k on this breakout candle here. It's been number go up and no signs of weakness at the moment. I think the interesting time frames for me are going to be the daily time frame and maybe some of the lower, like the intraday time frames. But it's really the daily that I'm a big fan of. And there are a couple of levels that I think are relevant. As for resistance, there's really not much, right? We're not, unless you want to crank out the old fib extensions and get the 1.618, 2.618, all that type of excuse me, all that type of stuff. I'm personally not a huge fan, so I'm not going to put a lot of stock into it. So I suppose the resistance levels will have to be very local as to where the last swing high or the last top formed, and expecting that to break should the trend continue. I do think there are basically 3 areas which are worth being aware of for both lower time frame trading, but also for a higher time frame view. And those areas are as follows. The first decent or kind of passable candidate for a lower time frame or intraday support for me is this daily lowest close here, which lands at around 26 odd. We'll see in a moment. You'll recall that on the weekly time frame, we had a similar structure, which really didn't look that great. You know, it's not exactly an outstanding level, but I ended up buying it and it ended up working. Like, when you're in a very strong trend, you can't be too picky. You just kind of have to work with what the market gives you. So I literally had this lowest close level as a level of support, and despite not being anything to write home about, it worked and number go up. So our requirements for what constitutes a valid level of support, I think, need to be slightly adjusted. Or at least be open-minded towards it when the market is trending very strongly. So in that similar type of vein, these daily lowest closes and just high time frame lowest closes before some sort of continuation tend to be decent, at least intraday levels. So I'm happy to use that and have that here as the lowest close. So that's kind of level, the first level, the one closest to market that I think is most relevant. And I think it's decent enough for more aggressive and shorter term intraday trading. Okay, and we'll see when we look at this level on lower time frames, it really does look like the kind of hourly 15-minute range low, etc., etc. The second area is essentially this consolidation here, which we broke out from. As you will probably recognize from just about every single live stream, this type of impulse, consolidate, impulse structure. The consolidation itself, specifically its upper and lower boundaries, make for useful support, resistance, anchors, pivots, whatever you want to call them. So in that vein, we can simply just do something like this. Highest close, lowest close. You can just box out the whole thing if you want, but this consolidation as a whole is a valid technical structure for me. Level number 2. And then, as you can imagine, where level number 3 is going to fall, it's this 20k all-time high breakout area. Again, it doesn't have to be a line in the sand. It's not perfect, but in a very similar type of vein, the last or the range preceding the all-time high break. So the way of delineating that, I think taking some liberties is absolutely fine. But even using this highest close and maybe the wick, or however you want to define the top of this range, closer to around 19.6, 19.7k, like the level is fairly self-explanatory, broken on this candle. I think that is also a very decent candidate to have on the charts. So what do these levels mean, or how am I currently viewing them? For level number 1, it wouldn't be an area where I'd be particularly keen on larger swing trades or reallocating spot, this, that, etc. I think this is a good intraday bounce level. And if it doesn't work, there's plenty of room to get out of the way until the next one. So for lower time frame directional bias with some higher time frame semblance, I think this level is good to go. The second area, the top of the previous breakout range, this is my kind of more or less, if this doesn't hold, then we correct much further / retest all-time high. So in terms of daily structure, again, this is kind of in brackets and intraday. In terms of the first real daily structure that I'd like to see hold on the pullback, it's this consolidation here. And if that fails, then I would almost certainly look for a retest of the old all-time high and this previous range breakout. So what does that leave us with? Intraday, lower time frame punts, first real daily level of support, and if that fails, this is our kind of macro retest that I don't want to see. And I really think that's all you probably need for the time being on the Bitcoin chart. You've got your lower time frame stuff, the first real high time frame test, and then the do or die type of area closer to 20k. And generally assuming continuation until proven otherwise. If these levels do fail, I think the market environment is such that if you manage to catch something on the short side, sort of from A to B, for example, I personally wouldn't be too keen on it, because even if we get a short-term breakdown, the working assumption, for me at least, is that it won't go as far, or it'll fail, or it's some sort of trap, right? So even if one level breaks and it looks like price is moving maybe from A to B or from B to C, as discussed on Casual Friday, the way I would view that is not to chase short to try to catch the leg. It's rather being prepared to play the bounce from the next level and then seeing what the market gives me. It's one of those directional bias sorts of things where in a strong bullish trend, I'm not going to necessarily short breaks of support. I'm just going to look until the next level to play a bounce, just because it's more kind of in tandem with the trend overall. So does that make sense so far, where these levels come from, how I'm looking at them, and why I think they're somewhat relevant and important? Okay, cool. And I think that's really it for the time being. If we overlay what they actually look like and how I've got them on my own chart, it's pretty much exactly what we talked about, right? So this daily level, based on lowest close, that comes out at what? 26,300 more or less. Then we've got the range, which we broke out from, upper boundary around 24k, lower boundary close to 23k, and then the macro all-time high blah blah retest level, which I don't want to see in the short term, closer to 20k, as you can expect. So for shorter term trading, something like this. If we do dip on the daily time frame, I'm not looking to really knife catch anything until we reach the previous breakout level. And again, as discussed previously, in a strong trend, there's no reason for price to fail these breakout levels. Like, I know we talk a lot about, oh, broke resistance, back below it, failed breakout, back at resistance, etc. But these are patterns either for a bearish market or for a range-bound market primarily. And if these sorts of bearish patterns start to emerge, I mean, that in itself is a sign of a shift in market conditions. And I think knowing when to apply certain patterns is a huge edge in itself. I know from myself and also from a lot of my friends that I've spoken to who really did their best when the market was ranging. They've really struggled, at least on the leveraged side of things, to trade a lot of this price action, because every single breakout they treat with skepticism. Like, okay, what if this is the top? What if it's an SFP? What if it's a deviation? Oh, funding just turned very bearish after this breakout, etc. But as I've tweeted previously, for the most part, and certainly when it's going against a strong trend, these sorts of failed breakout patterns are the exception, not the rule. Right? These are bearish patterns. It's bulls being trapped offside. And I think generally if the market looks strong, then bulls shouldn't really be trapped offside. There is no offside, right? Certainly not on the very, very high time frames. So I think that same logic can be applied to this range. I would personally be happy and content with a test of the previous consolidation, but failing the upper boundary and certainly failing the lower boundary would be kind of unacceptable, right? If the market's so strong and it's happy to rally just straight up with no pullbacks, if you do actually get a pullback to a decent technical level, which we haven't had in quite a long time, then I would really expect market participants to basically take advantage of that and not let it slip. And if they don't, it's one of those things where I think this is a good bullish setup, essentially. And if that good bullish setup fails, we all know that good setups failing are suggestive of strength on the other side of the market, okay? So low time frame punts off of this level are fine. This is the high time frame area that should really hold for trend continuation. And if we get all the way down here, that's my do or die pretty much high time frame area. What do I think will happen? Again, assuming continuation until this breaks. Just going to assume number up only. If we get down here, this is probably the first area where I'll get really active from my higher time frame strategy to buy a dip. And if that fails, it's kind of a lookout below thing until we reach far less comfortable areas. Okay? I think that's pretty straightforward. As for my own trading, I tried to catch a bit of this further away from the daily level. Specifically on Bitcoin, I was looking for this lowest close level here, right? We had the bearish price action below it, close below it, etc. The market then broke out, and I was looking for a retest with a thrust candle stop to take it to at least here, but ideally some sort of higher high. And I didn't get it, right? Market turned before the level, and I'm honestly not sure if I'm going to rebid it again. Certainly not with the limit order. If it gets down here and sets up appropriately, I might have another punt. So basically, you have support, the failed breakdown, and then this is still support. So this is arguably puntable for me. Maybe even a bit lower if it comes into the daily level, and we can make a bit of an area from that intraday lowest close to the daily support, right? So for a lower time frame trade, punting basically the bottom of the range. I'm a bit weary of this cluster here, but whatever. I think more or less the idea is premised off the daily level. That I might take that again. No, not a limit order type of trade. It really depends how it looks and whether I'm there, what sort of entry I get, and so on. Missed trade earlier, that's fine, and that's kind of it on the Bitcoin side of things. But you can see there's a lot of space, right, between these levels. How we have this daily, this is the best thing we've got up here at 26. And if that fails, I'm personally not going to knife catch much / any of this until we reach the bottom, the top of the previous breakout level, closer to 24K. So I think the more straightforward or risk-defined trades are either at daily structure in the bottom of the range, or if that fails, on a much more meaningful pullback towards daily structure. I think a lot of the trading that may occur in this kind of midpoint between these two good daily levels, it'll probably be shit trading in this area. So I'd like to do business at structure, and for me that's here and here. Okay, and so far nothing to write home about. Didn't retest, so nothing good for me. So yeah, that's Bitcoin. I hope that's somewhat clear, helpful, straightforward, etc., etc. Nothing else to really add on that front, I think. As always, if there are any questions, let me know. And if you've learned a single thing, just like the video. ETH looks good. So again, not a huge fan of kind of weekly, monthly type of stuff. I mean, monthly is arguably at the opposite side of the range resistance, but yeah, that's, you know, not indicative of anything quite yet. Weekly, in the same vein, you know that I'm not in love with any of the levels up here. If I had to kind of provide some context, I suppose the argument would be some sort of resistance approaching closer to 800, right? I know we've got these quarterly and monthly levels already being reached as well, so it's that type of area. But again, when I'm not sure, and when the higher time-frames aren't that clean, then I won't put a lot of stock into it. I think the daily time-frame has been really good, so as well as the intraday time-frames. I'll do the analysis first, then talk about some punts and some trades. Those of you who read Technical Roundup and also who were there on Casual Friday, this did end up being the higher low that we discussed in continuation of kind of the market structure we had previously. High, low, kind of equal high, higher low, higher high, and then we were discussing where is a good or reasonable area for the higher low to come in. And I think we discussed the breakout level, if you're being kind of cautious, and then also I think we talked about this consolidation, I think. I'm not terribly sure. And I mean, this is really nice, right? You have what looks like a breakdown back within the range. This would certainly get a lot of participants bearish, right? It looks like a failed breakout. But again, we know the high time frame trend is up. So we look for reclaims, reversals at those levels. We don't generally trust them. And look, even just looking at the anatomy of this, when this candle closed, right, with the low coming in all the way here, how much are you truly looking to capture at that stage, right? It's like, you know that the preceding pattern is higher highs and higher lows. So, you know, if you're not selling, for example, up here, and you're only getting bearish when the market's already closed here, having made a low so close to the previous swing low, you always need to consider how much is actually on the table for me, even if I'm right. And in this instance, there really wasn't much, right? I got a couple of messages about entries on the reclaim of that level. I personally didn't get on board that, but I mean, kudos to you if you did. Makes a lot of sense. Arguably a bit tricky if you give a lot of stock to this consolidation. But this sort of speaks to the idea that we also discuss on stream, that failed breakouts don't happen twice, right? So if this is our level of resistance, you have resistance, resistance, you have the break, which fails, right? We should expect resistance back at the level again. And if it fails, it's much more likely to just be continuation as opposed to fake out number one. Oh, fake out number two. Wow, what a trap. This is so ugly. And that's essentially what we had here, right? When it closed back above the level, essentially found support there and number go up, okay? On the trading side of things, we'll do some more analysis in a bit. I caught a very trivial, well, not necessarily trivial, but not a huge part of this retest here. And again, the context, look at, I mean, this is the chart I use, right? We've got the monthly level. So for me, this was a very kind of boring bread and butter type of trade where I entered on the hourly close, stop was at the hourly low, and I got out when price basically swing failed this high, right? So more or less on this candle here. Not some huge, crazy winner, etc. But again, no drawdown whatsoever, very short holding time, bread and butter flip at the level. I will take those trades all day long, and since then it's, you know, whatever, continued higher, and I'm fine missing that second leg of the trade. Someone I was talking to about basically trading ETH and some lower time frame stuff, and he was basically asking that he took a very similar trade, you know, the support resistance flip at 670s, but the question was, you know, I've been cutting trades at FTA, but the market has been going past FTA for all of these trades, right? So if, let's say, the exit was presumed similar to mine around here, but every time I exit my longs, the market just kind of doubles my potential payout, for example, just does so without me. What's the fix, cure, or solution to that? I think two considerations are relevant when you notice that you're on the right side of the market, but you're just kind of leaving potential R on the table. And I think there are two solutions to that. One is to take trades beyond FTA, or simply add longer holding periods for those trades. So for example, this level that I use as a trouble area, it's not a daily or weekly or monthly level. It's like a local swing high, right? Despite the entry being a high time frame structure. So the first kind of fix or solution for those who find that their trades are kind of leaving a lot on the table without them is to basically raise the bar for what it means to be a trouble area. So yes, while this is a valid intraday first trouble area, if you notice that you're leaving a lot on the table, you can essentially raise the requirements and say, well, I'm not expecting trouble here, but maybe I'll get some trouble at the quarterly level. And so that extra bit of space is where you can capture more of the move. So essentially being less conservative and more liberal with what you expect to actually provide trouble, right? Loosening the definition of FTA. The second variant, which is kind of my preferred one and what I tend to do, is keep that same reasonably strict definition of FTA. And even if you're closing trades early, instead of holding onto them more, just trade more, right? So instead of just... So for example, if you close out on this swing failure like I did here, then you're open-minded towards re-entering on the flip of that trouble area to take another trade from A to B. So basically, solution one, which is hold your trades, would suggest that, you know, you enter A, you ignore the midpoint or whatever as a trouble area, and you look to get out at B. Solution number two says, well, look, your FTA type of trades are still fine, except you now break it up. So trade number one ends up being A to B, and then trade number two on the flip of that ends up being B to C. So you're still more or less capturing similar moves in the market, except your actual trade management is different. Here, you're being you're taking fewer trades, but letting them run more. Here, you're taking more trades, but keeping that same strict or conservative profit-taking approach. And I don't think one is necessarily better than the other. I think certainly when you're in a strong trend, despite not being my personal preference, I'm open-minded towards the idea of just letting winners run. But I just think if you're running hot and your system is performing well and you're trading in tandem with the trend, like trading more is just going to keep you sharper than just kind of getting one good entry and hoping it takes you to 1 million, you know? Does that make sense to anyone about kind of all this stuff? Makes perfect sense. Okay, cool. As for ETH right now, I kind of struggle to have particularly strong views, to be completely honest with you. The daily market structure play was pretty straightforward. So now we can technically ask ourselves again, what is a good or reasonable candidate for some sort of higher low? But I only tend to ask that question when the market is showing some sort of sign of slowing down, right? So you've got, for example, high, low, higher, high, higher, low, higher, high. And then as the market starts to drift, then you ask, okay, when's the higher low going to come? So in this instance, if we take, again, recent levels of market structure, this was our high, and then we've broken that here. So higher high in the making. Only once it starts kind of chilling out a bit, retracing, whatever, then I think we can reasonably ask where can we expect a higher low. And depending on how this sets up, and certainly if we see high time frame closes, which are in a few days, and strength through the monthly level at 669, etc., that in itself, the 700 area, could turn into a nice area or higher low candidate on those terms. So something like this: high, low, higher high, higher low, higher high, higher low, then some sort of higher high. Then if the market starts to dip, we will have had a monthly close through that level, and I think that will be a pretty reasonable area for a flip and for continuation in market structure. It's never really this easy, and I'd be certainly open-minded towards seeing some sort of wick lower, but at least on a high time frame closing basis, I'd want to see a flip of this monthly level. And if we look at what the kind of quarterly time frame, whatever it looks like, I mean, Bitcoin had this same level where we had the all-time high close, all that sort of stuff, and it got completely obliterated. So yes, it's at resistance here, so some caution, etc. is warranted. But if ETH BTC continues to look good and we just don't see any breakdown in the type of very clean structure we've had on the way up, I'm just going to assume continuation until proven otherwise. And I think being conservative also just makes sense with how strong this trend has been, especially with how reliable market structure has been. So I think just moving up our area of focus to the most recent swing lows. So like, as long as this isn't broken, expecting higher highs. As long as this isn't broken, expecting higher highs, we can kind of keep doing that for the time being. Do you get a bit of a late signal if you're just using that? I mean, potentially, but you know, there's always a cost to pay for this sort of stuff. So long story short, I want to see some high time frame closes again, and you can see it's the 28th today, so in a few days. At the very least, through this monthly level at 700. I mean, a close through the quarterly at 740, 750 would be even better. And the only time I can see this being particularly actionable for me is just like we had here. We get some sort of drift lower, and then I'd want to see this level flip on a high time frame basis from broken resistance to support, being open-minded towards some wicks lower as well. And this is the thing about high time frames, right? We can see even on the daily, it just looks like this level got completely crushed and the market went straight through it, right? Yeah, the daily close here, and then we're here now. Whereas if we look at intraday time frames, you can see we did get one 4-hour retest of that level that made for a decent trade. Something that doesn't happen all too infrequently is that you get your intraday retest of a high time frame level, then the market will kind of do whatever, and then eventually come down and offer you a higher time frame retest of that same level, and that's where my system lets me trade with a bit more size and a bit more conviction as well. So I'd be very much open-minded towards any pullbacks into this area. Think that's all I've got for now. I don't have any, like, I'm not going to be bullish into this level. I'm pretty much just going to follow market structure and look to do business on pullbacks, and if I don't get them, I guess whatever, I'll have to live with it. But it's been kind, like, you know, managing to catch this, and you know, I'm sure when the market was up here, the expectation was just along with a stop at the thrust candle looking for the next level, but you know, patience rewarded, blah blah blah, generic type of crap. Let me know if that makes sense while we look at ETH BTC. Thoughts on price action around the yearly open? I don't know, Intramoto. I don't know. I think it's just such a large time frame that if that candle period is 12 months, 1 month of price action around the yearly open is still such a small fraction of that candle's formation that I just think it's a bit too big, unless we're talking several months down the line, to have any decently actionable views with regard to price action around the yearly open. It kind of has to scale, right? So we're looking at daily price action, like lower time frame price action at the daily open. It's like some fraction or proportion of that candlestick. Whereas if we're talking yearly open, which is 12 monthly candles, I'm going to need to see at least 2 or 3 monthly candles to maybe start crafting some sort of view, right? So ETH BTC, something we also discussed, and ended up being kind of predictably tricky, which was that the weekly close through this area of market structure is shitty. But at that point, when the market was around here, it's kind of like, well, how much are you really looking to capture of this bearish move, given we're approaching a confluence of reasonable levels of support, right? Which are kind of these sequence of lower highs before the breakout, or if you want to phrase it as the consolidation before price made a higher high. It was one of those areas where you could justify being bearish, but the amount to capture on the table just wasn't high enough from a risk-reward consideration to really make it worth chasing. Now, we got a pretty deep wick, and market really looked scary when it was down here, but on a weekly closing basis, it kind of held both sides of the range, right? So in terms of resistance, we have this high time frame breakout level here, and expecting that to be at the top of the range, and in terms of support, it held the lowest close level before the breakdown. Again, whether you want to use this or use this candle or some sort of combination of the two, it doesn't really matter too much. But I think as areas, we're pretty well defined in terms of support and resistance, right? Support down here, resistance up here, and both sides are intact at the moment. I think to be bullish ETH BTC, I'd need to see a weekly close at least above this breakout level, because again, the whole idea of a double failed breakout is quite rare, right? So we had a breakout, retest, okay, and that's currently resistance. If it breaks above it again, the chances of it falling below it again are pretty low, right? I don't really trust or believe in double fake outs. I think if it does get reclaimed, it's probably going to get full sent. From a market structure point of view, or even just from an SR point of view, you could be more conservative and delineate this high and say, again, as per the market structure video, this leg up led to a lower low, so that's expected to be resistance. If the market's bullish, reversal would look something like this, right? It's that old pattern we talked about, whereby you get a low, a lower low, and then into a higher high. And then the old high is where you get your reversal. That's kind of what that would look like. So kind of depends to a large extent on your risk appetite. I think at the very least, even in the conservative camp, you want to see a close back above this deep weekly swing level, which is the previous support currently turned resistance. And then it's simply a question of, are you going to wait for quote-unquote confirmation here, or is that enough for you? But for the time being, it's at resistance, right? Which is relevant. And that can be viewed on other time frames as well. I mean, the daily, probably the most straightforward one. Slightly less clear, but again, we are dealing with kind of weekly areas, whether it's from this low or this consolidation or just this area generally. Daily time frame looking good, but again, I think the more obvious structure in this area is derived on the weekly time frame, and so waiting for that probably isn't the worst idea in the world. Do I have anything else interesting to say? No, I think that's fairly self-explanatory. Bounced at a reasonable level, and has pretty much reached first trouble area. If you break FTA, I think that's good to go at least until the lower high level. But I mean, look, this could turn bullish very quickly. I just don't want to shill it as being bullish right at resistance. Just doesn't make a whole lot of sense to me. Because again, you have ETH BTC retesting that weekly level, and then you've got ETH USD again, not amazing, but arguably in an area of kind of quarterly, whatever high time frame resistance. I just think being slightly careful, this is one of the few areas where it makes sense to have that view. In terms of the inverted head and shoulders sort of thing, I'm reasonably open-minded towards it, depending on how it's drawn. But if it is the most bullish pattern in the world and we're going to 1 million, right, my requirement for bullishness is quite low. It's pretty much just reclaim this level, and at that point, there's a good chance we get something like this, right? But just it's at resistance. That's all I'm going to say. I think the pattern is valid, but context is much more important for me than just the sequence of low, lower low, lower high, right? Because that's basically what inverted head and shoulders is, right? You've got a low, you've got a lower low, and then you've got some sort of higher low level here. So this being the reclaim, and this being the so-called deviation. But if that move ends up landing itself at level resistance, as it is here, I mean, what's the trade at that point? Do you end up buying resistance and then what, a stop at the low, and then, I mean, your FTA is literally on top of you. Even if you're being conservative, it's kind of here. So not really the most attractive thing in the world. I think if you just look at this chart, your eye is naturally drawn to this type of area, right? No matter how far you extend it, we're dealing with a pretty good pivot here. So the least I could ask for is a break. Okay, I think that's reasonably straightforward. Let me know if you disagree, or if you think that makes no sense whatsoever. One of the things in the title is, of course, the XRP delistings. I refer to the recent announcement. I think this is literally today. Fucking Saif Dean, fuck off, man. The Bitcoin Standard is such a shit book. Honestly, it belongs in the fiction category of whatever library chooses to self-inflict the burden of stocking it. Really, really bad piece of literature. I do not recommend it whatsoever. Nevertheless, back to this sort of stuff. Yeah, so OKCoin, suspension of XRP and deposits on OKCoin. Interestingly enough, unlike, I think it was Bitstamp, who only delist or made it unavailable or are making it unavailable for US customers, this seems to be an exchange-wide decision, which is slightly broader in scope. The interesting thing to bear in mind, and I agree, is that this situation will likely take time to reach a resolution. And if the resolution ends up being positive, like, I don't know, would settlement with the SEC be a positive outcome? Perhaps. Then we could see this thing being relisted, and, you know, XRP certainly got, or Ripple certainly got enough money for that sort of thing if the regulatory risk goes away. But as we discussed on Casual Friday, you know, there's plenty of trading to be done on Bitcoin, plenty of trading to be done on ETH. Some of the altcoins are much clearer. Why burden yourself with one of the few majors, which kind of looks rough technically, but also has this kind of fundamental backdrop, which makes you wonder, will I even be able to trade this damn thing next week? And where is this litigation going, etc., etc.? Like, no need to make things harder than they need to be. So, yeah, not in a rush to prioritize. Rogue Signal says, I stopped reading after the part about how all modern art is garbage because fiat money. Yeah, it's just not a good book. Not much has changed on the technical side of things. You'll recall we had, and we'll look at the USD pair as well. We had that market structure pattern we discussed where you have a low. Oops. Oh dear. Hold on. So you have a high, right? You have a low. Let me just think about this. You get, whatever, it's this, right? You have a low, which makes a higher high, right? That should be bullish. And then after making a higher high, price makes a lower low. So that's what I was going to say. Lower low, and this from the market structure video, of course, after higher high equals bad, right? Or bearish. And that's kind of what we have here. And the market on lower time frames found resistance at that first low. So again, you've got the low, the leg up leads to a higher high, and then on the way down you're expecting some sort of higher low if it's bullish, and then it fails completely. And again, this is one of those time frame things where it looks like it just nuked through the level with no regard for it whatsoever. But if we look on lower time frames, oh, narrowly missed. Okay, I mean, the same structure on the daily time frame actually works. If we take the lowest close, that's what I was looking for here. You've got the low, which leads to a higher high, and then on the way down, it fails to make a higher low. That low, which led to a higher high, is then, once it fails, an area of resistance, and that's where the market found it on a retest. So I think even to be bullish, the Bitcoin pair, and even just using these weekly anchors instead. And there's a lot of space here, right? So even a dead cat bounce, which takes this like 30-40% up, which is a lot, unless it reclaims this weekly level after such a clear pattern, that's still a rally to be sold or technically a bearish retest. Only if it seems really strong, like an impulsive close through here and then finding support, I'd be open-minded towards a void fill trade into maybe this last low pre-break. But any rallies into this area, which don't just nuke it, engulf it, look really bullish through it completely, are still kind of technical rallies for selling or bearish retests, whatever you want to call them. But again, shorting down here is always risky as well, because the nearest level of resistance is, well, it's even further than I thought, kind of 50-60% away. So worth being aware of. If we wanted to really get granular with it, we could delineate this daily range, having lowest close and highest close. I think that's reasonable if you're so inclined to trade XRP, BTC on lower time frames, etc. But for me, from a matter of perspective, and given there are no real incentives to trade this over anything else given the regulatory uncertainty, I'd rather wait for the weekly picture to look decent than try to kind of knife catch around here. So yeah, that's kind of my view. I tend to get, like, you can get really fucked when the market looks like this and you're chasing bearish news to try to keep getting short. Because even if you get a small squeeze, chances are you'll get really offside. Which is why I prefer to do business kind of at structure as opposed to well away from it, especially on instruments that look like this. So no rush to trade this until the weekly basically gets back above 1700, 1800 sats. I'm going to expect this area to be resistance. Why not short XRP and XLM? Because I don't have a setup. If it comes into structure, I'll certainly consider it, right? If it actually comes into retest the level which I've got as resistance, but kind of down here, I mean, yeah, sure, you've got this potentially, but not for me. And again, just generally, why trade XRP when you don't have to, and you don't even know if your platform is going to keep offering it if these delistings continue. I don't think it goes to zero. No, I just think there are better opportunities in the market. We can look at the USD pair as well. That had a pretty rough weekly close, I think, as far as structure goes. Yeah, it did. So we had the high time frame do or die kind of analogous Bitcoin 10.5 level at, I think it was around 30 cents, right? Pretty much this weekly breakout area here. The level itself is self-explanatory, resistance, huge breakout. And then the question was, will we get a weekly close above that level to maybe absorb some of the selling in the USD pair? And on the weekly close, it failed, right? Closed below it, and it's currently finding resistance within that structure as well. I mean, I've seen arguments made that it's landed at support, like this consolidation here, or just this range generally. I think that's somewhat valid, right? Like this cluster is support, this failed breakout level resistance, and this is kind of the range. I see that, but that doesn't mean I'd want to rebuy this level here. Because for me personally, what's more important, like this level is far more important than this limp dick consolidation here. So if you want to play the range, be my guest. But I think to be bullish, the USD pair, it's just failed pretty much the best level on the chart, or the best area on the chart, which is this one. If it wants to change the picture and reclaim its upper boundary, I think there's a play to be made to refill most of this candle. But again, what's the driving narrative for this for me? It's that support has failed. It's bounced off an okay structure. Could range, but I'm not going to get bullish until it reclaims the best level on the chart. Like the best support has failed. I'm not going to look for excuses to long at structures which aren't as good. Does that make sense? We will look at DOT, actually. Boss, can we stop talking about XRP every episode? Why? Why? It's one of the majors. It moves a lot. It's got a lot of news. People ask for it. I don't see... It's not like we spend all episode on it. Link. Not much on the USD pair. The BTC pair has had a shitty close. Yeah, the fundamentals are bad. It doesn't matter. It doesn't matter about the fundamentals. And at least they're relevant. There's like stuff going on, right? So Link is... it's just in a bit of a shitty spot right now with regard to where it is relevant to, or in relation to really good levels, right? So the weekly close was below the top of this macro breakout whatever range, and the wick, due to kind of more or less illiquid conditions, reached or came close to the bottom of the range. If we look at the weekly close, it closed back within the range high, right? And the market is currently kind of up here, in no man's land between these two boundaries. So for actually trading this, I mean, the weekly close back below the range high, that's bearish for me, right? Should have acted as support, despite the deep wick, failed and closed below it, so expecting the range high to act as resistance. At the same time, support hasn't been like fully tested or meaningfully tested, so that's still a decent and reasonable objective as long as the upper boundary doesn't get reclaimed. And that's the thing, Link doesn't fake out much, right? Like, look at how it behaved within this cluster. Perfect support on the closes above it, and then as soon as it closed below it, perfect flip at the level, traded lower. And then same thing at the cluster bottom, right? You have perfect wicks closes on top of the level, and then as soon as it failed, here, close, acts as resistance, goes the way down. So there's no real precedent, at least at the moment, of thinking that the weekly closes are traps, fake outs, and it closed below but it's bullish, or it's closed above, it's actually bearish. Like, just looking at the past weeks of price action, it's just pretty straightforward and behaves well in terms of not offering fake outs, which is why the close below is significant. If it starts to rally, I think until proven otherwise, and until it impulsively reclaims the top of the range, that rally would be a bearish retest, okay? Pretty much an A to B type of scenario should it occur, and then validation would obviously be any strong close back above the level. Just imagine that candle's green. In terms of turning bullish this pair, I know Donald's argument is that it's a long-term market cycle top, and it's certainly leaning that way given it failed one of the best levels. But to turn bullish, or areas where I think longs may be preferable, as mentioned, option 1 on a reclaim of the range high. I think there's an A to B play to be had to retrace much of this dump, kind of a range high reclaim. Option 2 is obviously at the bottom of the range, because that's your kind of do or die support. Where it is right now, close below range high, expecting resistance, and that's sort of it. Like right now, when it's so far away, or not quite at the range high or the range low, I'm not really interested in this area. Do you have any comment or thought about the RSI being above 90 on the weekly chart for Bitcoin? Always looking like a snack. Not really. It's one of those things where it works really well, and then at one point you enter a strong trend and you spend a year being overbought, and you end up shorting for the whole year and eating a big pile of shit, right? So in strongly trending environments, consistently overbought or oversold RSI can just be an indicator of the trend itself, as opposed to evidence of trend reversal. So I'd much rather just trade the levels, and if it is oversold, like overbought, and the market nukes, and it would naturally break one of my levels and maybe give me a setup or maybe give me a directional bias. But purely looking at the oscillator outside of context, I'm just not sure how much of an edge there's going to be there. I'd much rather trade what's in front of me in terms of market structure, levels, are buyers buying the levels, or kind of what's going on, rather than look at a momentum oscillator and then kind of expect the market to roll over because of it. You know what I mean? So my comments or thoughts, I mean, keep an eye out on it, but I definitely need to see follow through or the market move in that direction for it to be valid. Because again, the opposite side of that bet is that the market just stays overbought or oversold for weeks, months, etc., and you just get blown the fuck out. So waiting for actual continuation from the oscillator, be it via a failure swing, like a swing failure or some sort of divergence being confirmed, etc., I think that sort of stuff is much better and much more actionable than just values on the momentum oscillator, if that makes sense. Let me know if I didn't answer your question. Hey, Cred, if you trade USD pairs, are you keeping profits in USD or transferring Bitcoin? It depends where I'm trading and what. So if I'm trading linear futures, I mean, your profits are in USD, so that's just all stable coins, whatever. That's just USD. For inverse futures, they're in BTC, and I don't need to convert any of that. I just choose which contract I want to trade, and then I don't tend to touch the P&L from that point onwards. Oliver says, what are your thoughts on XRP? I think we just covered it about 8 to 10 minutes ago. My thoughts are, in a summary version, the technicals on the BTC pair and USD pairs don't look great, but chasing to short this down here probably isn't the best bet either. I think rallies on both of those pairs are rallies into resistance, but just generally from a zoomed out point of view, if you don't even know whether your exchange is going to keep XRP listed in the next week or two, and, you know, there's all this regulatory uncertainty on top of the technicals looking rough, like, why make life harder for yourself and trade that instrument as opposed to many of the others that are available? So I think the BTC pair, just to quickly recap, as long as this area acts as resistance on the BTC pair, it's still technically a bearish retest. The USD pair doesn't inspire me either, given it closed below the breakout level, the best level on the chart, so not much going on. Plus the, again, disadvantage of God knows where this thing is going to go from a regulatory point of view. I just don't see the appeal, to be completely honest. Hope that answers your question. I don't think they liquidate your position if they stop listing it. I'm pretty sure there's procedure as to how you can unwind it. Someone asked about XDZ USD. I don't think there's a whole lot going on for me here. Not quite. No strong views. I mean, this is just a lot of, look. Right? So, not great. I can't really see anything that jumps out. Maybe in the kind of medium term. We had this big breakdown, which is currently being retraced to some extent. If we take from a market structure point of view, this was the swing up, which made a lower low. If it fails to act as resistance or gets flipped, that lands at around, what, 235, 2.4. If you get a higher high through this level after making a lower low, so again, lower low into higher high from the market structure video is generally positive. If that sort of thing happens and you establish support there, so in this area here, if that happens, that there's a decent flip play there, maybe towards the top of the range. But aside from that, market structure broke to the downside, and for all I know, this is a rally to make a lower high. And from the zoomed out version, you can see just a whole lot of chop. So the minimum I'd need to see to maybe argue for some sort of positive resolution, impulsiveness, bullishness, etc., is a move like this. Lower low into a higher high. That's a decent reversal template into the top of the range, more or less, maybe even the swing high itself. But until that happens, it's just choppy and short term not great. So yeah, let me know if that answered your question. Someone asked about DOT. We'll look at .BTC first. Yeah, I mean, this thing's been trending down for a while, right? I think for the BTC pair, which again is relevant when Bitcoin's past all-time high, you need to make sure that getting long altcoins is worth it when Bitcoin printing what it is kind of the risk-free rates, because we all hold it. I think we have a decent little floor to work with in this area, right? If that gets reclaimed, there may be a window of outperformance, because again, look at the trend we're dealing with, right? It's kind of straight down. Straight down. So at the very least, I want to see some sort of break in market structure before arguing for reversal. I'm finding it very hard from just one candle at the moment to get optimistic, right? Because just look at this thing. And there have been many such pumps on the way up. You know, big green candles, etc., but they all kind of failed to achieve anything relative to previous highs. If that pattern changes and it makes a higher high, specifically, let's say through this level, if it does something like that, then we might have some sort of bottoming pattern on our hands. But for the time being, I'm just assuming this is a counter trend move. Okay. As for the USD pair, oh, no wonder everyone's asking me about DOT. I mean, look at it, it's just it's printed that sort of candle. I don't know is the answer, because the way these altcoins work is I could draw some levels of previous highs, like the top of the range here and here, and say that's resistance. But it could also just end up being ignored completely. What I will say is that the more recent sequence of higher lows, so from this point, right, has been pretty encouraging. This is one of those where I wouldn't chase it into the top of the range, but if you're open-minded towards fishing for higher low candidates, like this consolidation before the big move, kind of 4.7, 4.9, if you're so inclined, I think that's reasonable. But again, I don't think it's worth looking at the USD pair just in isolation, because it's worth looking at the BTC pair. What's my payoff relative to just doing absolutely fucking nothing holding Bitcoin, even if I get the trade idea, the trade execution, etc. correct? And if it's still underperforming Bitcoin, then maybe it's just not worth it. But again, if you're just kind of linear futures, maximalist, trade everything with an opportunity, market structure, I mean, it's still kind of range bound overall, but market structure is developing on the positive side. So in these cases, I don't breakout trade it. I'd wait for the next higher low area to get retested, and it's been pretty decent with these pre-breakout consolidations, right? I mean, the last one, this is the breakout leg, and the higher low was formed at the pre-breakout consolidation. We can kind of use the same logic. This is the higher leg, and we have the pre-breakout consolidation at around $5. That's my kind of .USDT point of view. Market structure ticking up, making higher lows. Just made a higher high, right? I mean, yeah, made a higher high. Where's the next candidate for a higher low? I mean, here. That's probably the best I can do for you. See you, Dumbo. You are welcome. Oh, Vet. Someone's saying it made some sort of pattern. Let's take a look. What time frame are you thinking? Just so I know your frame of reference. Yeah, this looks decent. Again, it's one of those cases where nearer term price action looks good, but you need to ask yourself, how much am I going to catch if I'm going to be conservative with my kind of range high first trouble area type of levels? I think you are reasonably correct that we have a similar pattern. We have this leg up. So we have a sequence of higher lows here. You have this leg up, which leads to a lower low, which is technically bearish, but then lower low into a higher high is a bullish type of reversal pattern, right? So applying that to what this chart generally looks like, and again, I'm taking some liberties with drawing this, and we know these can wick much lower and do all sorts of things, but just from a market structure point of view, something like this is reasonable, but I'd just be careful looking at the size of some of these wicks in getting in with anything too tight around the last high. And just generally from a kind of risk-reward point of view, with a lot of these altcoins and how much they wick to structure, if not this, given the proximity to the range high, it's one of those, okay, if this is the higher high, where can I look for a higher low sort of thing? Yes, this is the first pit stop from a market structure point of view, but if we include the context of the market reaching further so much and alts getting battered when things get volatile, I think we can do a similar thing and have this consolidation here for the dirty sort of fishing for a dip wick catching sort of activities, closer to 122s makes sense. Being cognizant the top of the range isn't too far away. So yeah, from a purely TA point of view, there's something here from the old high, lower low, higher high kind of reversal setup, A to B, maybe even higher if this is a range breakout. But from a more realistic altcoin trading, seeing these wicks, at least on Binance, etc. point of view, I think the better bet generally is to fish for those wicks at support. I certainly wouldn't be chasing it up here, given the proximity to resistance and all sorts of things. Can you give your opinion about the Bitcoin dominance chart? I do not think it is a useful chart, and I do not trade it, and I do not use it to inform my decisions. If I want to get a view for altcoin risk appetite, I'll look at ETH, I'll look at ETH BTC, and I'll look at the popular altcoins, like the DeFi ones, for example, and how they're performing. I don't think just looking at an index which is measured and curated and in pretty arbitrary ways is the most useful information we can get with regard to altcoins. Do you ever go to the 5 or 15 minute time frame, asks Over Age? Yes, I do. If you've enjoyed the charting session so far, make sure to subscribe to the channel if you haven't already. Leave a like, do all the fun algo engagement stuff. Out of the DeFi pairs, yeah. So I think this now is more or less do or die for YFI. It spent so much time at this range low level here. And now you've had kind of the final bastion of a reversal pattern, right? So you have previous range low, reclaimed it on this move here. You have one test of support, two tests of support, and then you had one of my favorite patterns. You get the close below, close above. That really should be it. If it doesn't go to the range high now, it'll probably not do so for a very long time and take a huge shit, etc. I might punt this if things set up appropriately from a technical point of view. Invalidation probably be some sort of thrust candle stop or even the wider stop here. And the objective being, I mean, first trouble area is obviously the lower high, but the range high at 34s is the technical kind of range to range play. So, I mean, you have to ask, what more can this level do, right? You have the reclaim, test number 1, test number 2, failed break. Like, come on, you can't really ask for more than that. So if not now, then never. I may punt this if it gets down and starts wicking into this area again. I think it's reasonably risk defined with this deviation, and the objective, the macro one, will be the top of the range. So yeah, that's okay. Uni's still stuck around $4, as someone in the chat pointed out. It's just not very nice. The levels aren't hugely helpful, at least when we're dealing with the previous range. But you know what we've seen? Like, there's been no impulsive break of... I might even add $4 as a level in itself. That seems to be so prevalent. $4. Yeah, we're going to keep that. And so it's finding no close above $4. It's just been getting smacked down there, which is, you know, psychological level, etc., etc. So from a purely TA point of view, I would sit here and say, well, if it breaks above $4, that would mean resistance is broken, it turns to support, you buy a pullback and number go up. Like, that's fantastic, but most of the time it's bullshit when it comes to actual trading. There's a good chance that once this level pops, it'll close like somewhere around here or here, and then just continue straight away, leaving you in the dust waiting for a retest until, or if it comes at some point way later. I think we've had like 58 tests of this level. Catching the breakout is going to be pretty tricky unless you're comfortable with a really a less ideal entry away from structure. Whenever price literally coils up at a level like this, the probability of getting a break and retest type of trade is very low, and if it does happen, it happens on really low time frames that you kind of need to be there for. So yeah, I mean, from a TA point of view, break 4 probably goes to 5, but from a trading this point of view, it's probably going to be much harder than that. I don't think you get a good entry. In those cases, I either just don't trade it at all, or I trade the consolidation that forms after the break of the level. So let's say it breaks through and starts moving sideways. I'll trade within the consolidation and define my risk within the consolidation. with that objective as opposed to wait for some sort of pullback. Yeah, a bit more chop on Aave. SNX is just kind of number go up city. I don't know where all my fucking levels went. We had some levels for SNX, didn't we? Oh, well. Oh, nice reaction of Band. So again, just a reminder, what we're dealing with Band is this daily cluster here. Hit the upper boundary. Bounced. What do I like about this? I think we can more or less use... I mean, it's still moving sideways, right? There's no huge break in structure for the time being. We kind of take a zoomed out perspective. From a market structure point of view, if we take this breakdown, which retested the level, into context, again, we can overlay, if you will, a reversal setup into it. We have this high. You've got to swing up, lower low, and if we get a higher high, that would be a reasonable case for a reversal trade within here, with the objective of filling in a lot of this breakdown into this level. So that will be good, but for the time being, bounced off support, still choppy. I think if it forms this, good to go. If not, then it'll just keep moving sideways. But does overlaying the pattern make sense? Like, does this diagram, lower low, higher high, and then it's at that high where we expect support. Is this somewhat familiar to people now at this point? And if it isn't, just search crypto cred market structure on YouTube. It's one of the videos that's covered, and it should be kind of second nature at some point, being cognizant of these things. Sushi. The recovery on this thing was bloody amazing, to be completely honest with you. It was down like, I don't know, 60% on the day or something. Pretty impressive. I think this is another one of those where, from a charting, TA, whatever crappy point of view, the continuation through resistance is the most obvious trade, and this cluster is kind of the only thing left, and there's really not much else in the way. But when it's coiling at resistance like this, there's a good chance that you'll have to deal with an uncomfortable entry, either, well, usually some way past structure, like a consolidation that forms after a break, trading within that, or just away from levels. What I could see as a final kind of, because again, where's their space on the chart? Well, we've got support at 2.4, and then there's 1.7 as the next level. What I could see is a final do or die pullback closer to 2.3. Buy that, and then hold it into resistance, expecting some sort of expansion. That's kind of reasonable. But as we've seen more recently, expecting these instruments to behave really cleanly in terms of technicals. If Bitcoin sneezes, or even like we had in the last couple of weeks, when another major sneezes, like XRP did, altcoins are still at the mercy of the heavier participants in the market. I think this is one of those where you'd rather already be in a position rather than look for one. And I think if that's the case, as long as there are no closers back below 2.4, it's probably going to break this resistance eventually. But that's the range for the time being. Again, pure TA bullshit is something like this, but the chances that you get a clean version of that that's easy to trade, I think, are reasonably low. Yeah, Rune, top of the range. RSR, bouncing from the bottom of the range. Dot we talked about, and Dot we talked about. Thanks. Also, when trading alts, do you also take fundamentals into account? Depends what you mean by fundamentals. If I'm trading alts, I'll just tend to pay attention to look at stuff. Sorry, that makes no sense in English. I'll tend to divert my attention towards instruments that just have a lot of volume and attention. So those which are being traded actively, and they tend to behave well as a result. So if everyone's talking about Link, usually because it's moving very nicely and it trades well technically, that's what I'll look at. If everyone's talking about SNX, Sushi, DeFi stuff, I'll kind of almost trend follow the social trend and look at those coins, as well as keeping the majors on my radar as well. Do you use oscillators in general? Not in a long time. Not in a long time. I don't think there's anything wrong with them. I think if you know how to use them appropriately, there's absolutely nothing wrong with them. But a lot of the time, people pull out oscillators when it's time to cope, right? Like if the market's been really going up a lot and they haven't been on board to the extent they want, they start looking for signs of an overbought market. Same if, you know, they're buying and it's not working out, they'll start adding oscillators looking for an oversold market. So I think if you're using them, actually put some time into it. Know why you're choosing a momentum oscillator, how it's calculated, what kind of signals it generates, how to contextualize those signals in tandem with the underlying trend, whether to use those overbought, oversold, crossovers, whatever, as an entry trigger. Like, actually build something around it, as opposed to the 11th hour kind of Cinderella to the ball type of thing, where you're like, okay, I was wrong about the whole thing, but it is overbought on this thing I never look at. It's slightly less compelling. Hey, sent you a message with timestamps on Twitter. Thank you, I guess. I'll have a look. So yeah, I don't personally use oscillators. Nothing wrong with them, but if you are going to use them, I think have the decency to use them properly is decent advice. Yeah, that's all I've got. We've covered a lot, specifically with Bitcoin. I hope you know where we stand, as well as ETH BTC and ETH USD. I think those are really the big ones to be aware of. On the XRP side of things, I just think there's too much noise for it to be particularly interesting, but rallies are rallies into resistance, and some other stuff we covered as well. If you want more content, as a reminder, we've rewritten and reorganized the format of the newsletter, which comes out every Tuesday at 8 p.m. UTC. So it's going to be really interesting. It's not recycled coins or the same charts. It's just whatever we think is relevant. So it's supposed to be read cover to cover, you know, original content, etc. If you found it boring before, totally understand, but now it isn't. So be sure to check it out. A kind thank you and shout out to the sponsor of Technical Roundup, which is Bybit. If you want to check them out, and also as a way to support the live stream, you can do so by checking their links in the description, as well as liking this video if you found even a second of it helpful, and subscribing to the channel if you haven't already. As a reminder, on the content side of things, you've got newsletter on Tuesday, Duck on Wednesday, Casual Friday on Friday, and then the futures, well, the cryptocurrency margin trading guide in the next maybe 2 weeks or so. Really depends how far we go with that document. Plenty to look forward to. Trade safe. Remember, we're not geniuses, just the market's making our job easy. Approach every trade with the same humility as you would in a shitty range, blah, blah, blah. Generic wisdom. Thank you for your time. Hope you learned something, and I will see you on Friday. Goodbye.